How you doing, guys? It's LSP. It's currently the 17th of January 2017 at 2:23 p.m. GMT time. I skipped, I can't remember, I think maybe the last couple of days. I just thought I'd let the market settle a little bit before I do anything. I did take a small trade today, which I'll show you in a sec. But basically, nothing's really changed in terms of the analysis and the look ahead video. You can see that we've been driving up towards this 95.70 level. We did pop through it here, and again yesterday, and again today. And we are finding some price sensitivity in this area. So what I'm going to do is I'm going to mark off this level. And what I'm going to have to do is give me 1 sec. Okay, I'm just extend these lines a little. So the 96 big figure is going to be the next area that I would expect price to, if it continues higher, at least reach for 96 big figure, and nothing's going to change. Sorry, nothing's changed in terms of overall bias. I still believe we are, I don't want to say heavily bearish, but from what I can see on the charts, each price is showing me that the order flow is lower. So I think at some point, maybe in the next 2 to 3 months, we're going to be driving towards this low, potentially this low, and filling in some of this inefficiency and attacking some of these levels down here, but we'll see. And what I'll do as well, I'll extend this line so we know where we're at. So that's where we are. We are. If you think of it like this from the monthly range, okay, so we've got the month high up here, we've got the month low down here, so we are approaching the upper portion of the monthly range, the total range. So the midpoint of that total range, and my fib is just set up to show the equilibrium. So we're roughly at the equilibrium point, the 50% point of the total monthly range. So we may steady off in this area a little bit, and if we do punch up into this 96 level, I'd be quite interested to see if it rejects that level quite sharply and then starts to drive towards the equilibrium point again. So right now, not much to do, and I opted to take the trade on cable this week because of all the news that's come out, and I'll show you. It was pretty obvious trade. Euro-wise, pretty much the inverse, but with a few differences. This down candle right here, in this rectangle box that I've marked out, I was saying that if we get through this convincingly, then I'd like to see, and what I'm going to do, I'm just going to get rid of the box, and I'm just going to put the close price level, which is 114.40, okay, ish, that's rounded off, so 114.40. Quite interested to see if price does start to move a little bit higher and hits the 114.40 level. I would be more comfortable taking a short there than I would a long. I'll say it like that for now, until the time comes when I can actually address it properly. And then obviously we've got the liquidity down here at these equal lows, and you can see this is just a progression of, removing levels that have been, validated, and then putting other levels on there of interest, and then we watch the flow of price. Okay, there's obviously a lot of other stuff going on these charts, but I don't really want to go into too much detail yet because I want it to be a progression throughout the months as we go. So cable, again, obviously we've had news this week for cable, or the pound anyway. These Brexit votes and the government votes and all this stuff that's going on here in the UK. So we have to be mindful of that. We've got G20 meetings as well, which could upset the market at any point. But you can see, we had this really nice sharp drop. And I'm opting to leave these levels on for now, but we had this really nice sharp drop, and we've come all the way back up, and we're finding price sensitivity here, 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 on the 128.30 to 128.35 level, okay, which is our weekly open. And when you mark these things out, guys, and then you actually watch how price reacts on these levels throughout the weeks, it's actually quite interesting to note, because you can kind of drill down and look at the lower time frames and actually flesh out price action around those levels. It's pretty cool. So you can see, we tagged the 129.20 slightly over, which we marked off, and this level I believe is the mean threshold. Yep. I'll just go over to the weekly and I'll show you. It's this candle right here. Okay, so we've got the open, got the mean fresh of that up candle, and we've hit it once, come back down, challenged it again, rejected, and now we're kind of driving back towards that. So for me, just looking at price as it is, let me just go back to the weekly for a second. It is possible that we're going to be grinding towards this level, the 130 to 130.30 to 130.35. I'm going to loosely put that on there for now, but we need to convince that we get through 129.20 and then maybe be around here to kind of retrace a little bit before we continue higher. But again, there's no rush. There's really no rush. We can address these things as and when they come. 4 hour wise. Okay. Now, this big move here, okay, and I'm going to have to show you on the hourly in a second, but this move here comes all the way down, okay, takes out all the liquidity down here, fills in the inefficiency, tags this down candle, and then starts to rip. And then grind and grind and grind towards this 129.20 again. Okay, this is the type of rejection I like to see. It's very pronounced. It doesn't mean that just because this happens you go long. Obviously, there's other factors that you have to take into consideration. But with everything that I've discussed over the last couple of weeks, this is I like to see this. This is something that plays a huge role in my trading, and it's not just the rejection. It's the the scoop on liquidity, the taking of the stops, the rebalancing of price, then the rejection. If it came all the way down here, for example, and rejected from here and just turned around, it wouldn't have been as powerful, and I probably wouldn't have taken the trade today. So going over to the hourly, my intention was to take this high here. Okay, and you can see yesterday's price action. I didn't do anything yesterday. There's something that I've noted over the years. When you get aggressive moves like this, generally the next day, and this is a news related thing, if you look at the calendar you'll see why, but generally the next day, or for the next couple of days, you generally tend to get a little bit of consolidation, and you can actually see that on the Aussie dollar. If you take a look at the Aussie dollar, you'll see that we've had this really nice drop, and now we're kind of consolidating. We consolidated for for a few days, so it's the same principle, but obviously on a lower time frame. In the case of what we're looking at now, the hourly, you have to kind of let things settle a little bit. But today, I'll just drop down to the 50, and I want to show you something. So this is yesterday's price action here. Remember, after this price movement, sideways, sideways, sideways. Market opens today, grinds lower, grinds lower, grinds lower. Okay, takes out any liquidity below the Asian range low, takes out all of this liquidity down here, these three lows, low, 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 and low. Anybody that's long, all these stops have just been taken out, then reverses the whole move, and then starts to grind higher, okay, towards that higher time frame, liquidity pool up here, and this one here which hasn't been tagged yet. Okay, so let me just pop it on the chart, and I will confess this was a limit order which I put in, and you can see that I only took 21 pips on this trade. There was a time or a moment, obviously, when I was up a lot more than that. And I'll show you roughly about 30 pips to around about 45 pips or so. Okay, but for me, it's not necessarily about taking 40 pips or 50 pips or 20 pips or anything like that. It was a limit order, and we dropped down to the 5 minute and show you. It's a little bit easier to see. So there's my entry there. And it starts to grind higher. We get this really nice spike. And I wasn't actually watching the market at this time, and it's kind of ground lower, lower, lower. I've exited the trade because I want to at least bank 20 pips, which again was a hard limit order. So basically, my stop was brought up to a level where it's going to take me out anyway at 20 pips. Ended up getting 21, and then obviously it's ground higher, higher, higher. Takes out the liquidity above the hourly high up here, and that's about it. Just a simple 20 pip trade. I've been very busy today. I did a lot of the order changing, or the modifying. Sorry, not order changing, but the order modifying on my phone today while I was out and about. So again, nothing overly special. It's not the trade. It's not the entry. It's not the pips. It's got nothing to do with any of that. It's this. It's the story. Okay, down here, takes out the liquidity, everything that I've discussed. in the last couple of weeks drives higher. Then again, we come all the way down, scoops up the liquidity, fills in some of the inefficiency here on the daily higher time frame, rejects completely, starts to grind, then it starts to push higher. After all this, there's been so many opportunities, throughout that section here, okay, and then this small section up here, where you could have taken at least 1 or 2 trades, and made, taken a profitable outcome as long as you're patient and you understand the story behind everything that you're trading. So I'm going to leave it at that, guys, and I'm going to let the market do its thing today and tomorrow, and then I'll probably put something out as a weekly review of this week's price action, either Friday evening or Saturday evening, and then I'll get something out there for the weekly look ahead for next week as well, but that's later in the weekend. So I hope it finds you well, the video, and I'll catch up with you guys in the next one. Take care.